Okay, hi guys. See lots of regulars here, so welcome again. Thank you all for taking time out. I really appreciate that. Let me just close this down. Brilliant. Okay, you can see my screen okay? Yeah? Okay, fantastic. Okay. Well, it's been an interesting week in the forex market. Interesting couple of weeks actually, maybe even longer. As you guys know, certain currency pairs have been trending very, very, very well for several months now. But of course, um, people who the regular visitors to my webinars will know that trends aren't consistently in play. Okay, we have periods of trend followed by periods of consolidation, and then there has to be a breakout out of that period of consolidation. As a trend trader, I'm looking for that breakout to occur in the direction of the trend. Okay, and we've seen repeatedly again and again and again that this is what has happened since September. Okay, so currently what we're going through is another period of correction or consolidation, and what we're simply doing is standing aside and waiting for the next round of breakouts. If we have a breakout against a major trend, then I've got stop losses in play that I've locked in a good portion of the profit. If it breaks out in the direction of the trend, well, happy days. I'm going to just accumulate further profit. Okay, so let's see what has happened over the last 2, 3, 4 weeks in the Forex market. Okay, what you can see in front of you, first of all, again, regular guys, regular visitors to the webinar will be familiar with my setup. And what I have is the watch list on the left-hand side, the monthly chart in the top right corner, the weekly chart in the bottom left corner, and the daily charts in the bottom right corner. Currently, what you can see is a naked chart, so there's no indicators on there. It's just purely price action. If we go to my actual trading page, which you guys are familiar with, it'll look something like this. So again, we've got the monthly chart in the top right corner, and what we have is a tool which is plotting the major areas of support and resistance. So the red line is plotting the major resistance levels, the green line is plotting the major support levels, and I've also got the pink levels, which are representing the high, the low, and the closing price of 2014. So that's the highest price of 2014, the lowest price of 2014, and the closing price of 2014. So the way I use the pink lines is to really engage in whether price had been in a trend or in a consolidation the previous year. And the way my software works is that at the end of each year, the software will automatically update all of these support and resistance levels. So I don't need to be drawing them in. Having good software is really important because it takes a lot of the manual effort out of trading. In the bottom left corner, I have the weekly time frame and I have a trend filter. It's a proprietary trend filter, which is giving me areas of bullish trend where it's covered in green, and bearish trend where it's red. And I've also got the weekly 200 moving average, which is giving me a bias in price action. So when price is above the weekly 200 moving average, this is where I want to buy. And when I'm below the weekly 200 moving average, this is where I want to sell. And I've got the same setup on the daily time frame, where I've got that trend filter giving me areas of bullish and bearish trend. And I've also got the daily 200 moving average, which is giving me a bias in price action. So again, when price is above, this is a bull market and this is where I want to buy. And when price is below, this is a bear market and this is where I want to sell. Okay, so what I'm looking for is alignment. I'm looking for alignment between the weekly and the daily time frame. The monthly time frame really gives me areas of support and resistance, and also areas where I can expect a trend to develop. So I'm looking for large spaces where a trend can develop. I'm then using the weekly and the daily time frame to decipher whether price is going to move up or down in that area of clear space. So if price is below the weekly 200 moving averages and I've got red trend filter on both the weekly and daily, I'm looking to go short, and I'm looking for a bear trend to establish in that clear space. If price is above the weekly and the daily 200 moving average and I have a green trend filter, then I'm looking for price to develop a bull trend in that clear space. Okay, can I just get a quick thumbs up and a quick yes if you guys are clear with that? Thank you, thank you. Yes, okay, fantastic, brilliant. Okay, lots of yeses. Guys, if you have any questions, please type them in the box and we'll do a little question and answer session at the end, okay? The moving averages, I keep it very simple. I don't tend to, play around with things too much. So I use the 200 simple moving average on both the weekly and the daily time frame. Okay, so what we'll do is we'll start with the Aussie dollar. Okay, and you guys again should be very, very familiar with the Aussie dollar because we've looked at it repeatedly since I've started doing the webinars for FX Street. The Aussie dollar is never far from my watch list, and the reason for that is because if you look at the past history, you can see that this pair trends very well and hands out very good profit in a very smooth and linear fashion. Now, if we take price action to this area of consolidation, we can see that price was stuck in this prolonged area of consolidation. So you can see how this support level, which became resistance, and you can see how price has interacted with this level. Okay, there's moments where price has broken above. Remember, support and resistance levels, they're not hard levels. They're more of zonal areas. So, we can expect price to break through or not reach as far and, stay around that area. So we have had a few fake breakouts to the upside, but, in general, price has remained below this resistance level. We've also got a pivot support level here. If we actually look at the length of this consolidation, what we're looking at is June 2013. So if you guys look at the bottom of my screen down here, okay, you can see that the length of this consolidation is June 2013 all the way through to August 2014. Okay, so you're looking at a year and 2 months of consolidation. Now, the longer the consolidation, the bigger the breakout. We had a big move to the downside, and we can see that the pivot support is still holding strong. We then had an indecision bar. Now, this is where a lot of people go wrong. An indecision bar means indecision. A lot of people look at dojis and spinning tops as reversal candlesticks. And what that means is they then try to go against a major trend, especially if there's one being formed at an area of support or an area of resistance. Here, okay, you got it correct. If you'd gone short here, that's fine, you got it correct. But look how wrong you would have been if you started going long here. The next bar, we had a breakout to the downside. Now, once price has broken out of a consolidation area, what we're expecting price to do is then target round numbers. Okay, so on this particular scale, we've got 1.1. Now, look at the support and resistance levels. Look how they interact with round numbers. 1.10, we have a pivot level. We've then got 1. We've got a support level there. We've got 0.90. Okay, it wasn't a major level here, but we can certainly see some kind of pivot support level with 0.90. Okay, so once price is broken below here, we'd expect it to target 0.80, 0.70, and 0.60. And we can see that the trend did exactly that. It's targeted 0.80. After every move, what we expect is price to consolidate or to breathe. Now, we cannot consistently expect price to create lower lows, lower lows. There's going to be periods where price slows down, it goes sideways, it goes against the trend, and this is where a lot of traders struggle. This is where they start going against the major trend by piling in long positions. Okay, now look at the next couple of months. We've literally had indecision. Okay, and this is expected. This is just natural to price action. If we look at past trends, we can see that we've had a trend, indecision, continuation of the trend, flag, breather, pullback, continuation of the trend. So these breather areas are part and parcel of trend structure. And this is where patience comes into play. Patience is a virtue. What we're now looking for is a breakout to the downside. And until we get a breakout to the downside, we really want to hold our positions. If I go to the weekly time frame, we can see that we're trading below the weekly 200 moving average. And we've got the red trend filter in play, suggesting further weakness. All we're going through at the moment is an area of consolidation. What we want is a breakout to the downside. If we go to the daily time frame, we're trading below the daily 200 moving average. And we've got the red trend filter in play. Okay, we've now got a green trend filter in play. What that still is not enough for me to be looking to go long. This is still not telling me that we're in a trend reversal as yet. If we look at this a little bit closer, what we have is an area of resistance and we have an area of support. So price is basically stuck in this consolidation area. We can see that today's bar so far has produced an indecision. It's tried to break through and it's come back down. So this resistance level is currently holding strong. Directly above that, we've got the round number 0.80. So at the moment, the odds are still very much with the major trend. The odds are still with the bears. What we're simply doing is standing aside and waiting for price to dictate a trend continuation. How will we get that? That is when price weakens and breaks and closes below this support level. A break and a close below this support level, and we can expect price to target 0.70. Now, I've had positions running since November. Okay, so when price broke below 0.90, we've 0.90, then we had this area of consolidation. This is where I got triggered into my first position, and I now got several compounds running. And I've managed to hold these compounds through all of these consolidation areas. So we've had a move, consolidation, consolidation. So we can see consolidation areas are part and parcel of this trend structure. There is nothing to suggest that I need to be closing my profits, closing my positions and taking profit just as yet. I'm simply waiting, and the odds are still very much with the bears for now. Now, someone's mentioned maybe a double top in the making, a double top here. Yeah, potentially. But for me, this is just consolidation. Okay, but you know, and a double top will only be confirmed when it is confirmed, and a confirmation of the double top is a break and a close of this support level. Okay, so the odds are still very much with the bears. Patience on this one for now. A quick yes, please, that you guys got my analysis on that, because going forward, it's going to be much quicker. Yeah, brilliant. Okay, lots of yeses. Okay, good. All right, fantastic. Okay, lots of yeses coming through. All right, so let's have a look at some of the pairs that I'm currently involved in. Okay, Aussie dollar, New Zealand dollar. So I'll open up the monthly time frame. Aussie dollar, New Zealand dollar, we had a trend to the downside. So this is going back 2012, 2013. Very profitable trend for trend traders. Okay, after every move, there has to be a correction. And that is because of the support level going back to 2005, 2006. And we can see that in recent months, price has weakened back in the direction of the trend. We did have a bounce to the upside, and that's expected because, you know, we do have traders trying to go long at support levels, and that's expected. But look at what's happened. We've had an engulfing candle, price has weakened. If we go to the weekly time frame, we're trading below the weekly 200 moving average, and we've got the red trend filter. And if we go to the daily time frame, we're trading below the daily 200 moving average, and we've got the red trend filter. I got triggered into this trade in around February, around this level here, and you can see that's been quite slow going, but this is part of trading. You can't expect a trend to just shoot in your favor. More often than not, it kind of hangs around the entry level. It may go against me, but that's the whole point of a stop loss. And I tend to have quite wide stop losses, so I allow for price to consolidate, do what it has inside, and waiting for a breakout of this pivot level and a continuation of the downtrend. Okay, let's move on. Let's have a look at the euro. Okay, so the euro has been very, very, very profitable since September of last year, and you can see the weakness in the trend, the weakness in price. It found resistance at 1.4. Now, again, if we look at these peaks, they're all connected to round numbers. If you look at this peak, 1.6. If you look at these two peaks, that's 1.5. Okay, if you look at this support level, it's 1.2. Okay, so and we can see that once price broke below 1.2, it headed towards 1.1, and then 1, potentially, if it breaks 1, 0.9 and 0.8. And remember, technical analysis. What is technical analysis? Technical analysis simply means that whatever's happened in the past is a good indication of what can happen in the future. So we really want to see price target 1, 0.9 and 0.8. There is nothing to suggest the end of a trend just as yet. If we go to the weekly time frame, we're trading below the weekly 200 moving average, and we've got the red trend filter in play. And if we go to the daily time frame, we're trading below the daily 200 moving average. And if you actually look at the structure of the trend, we can see that we've had a move, then a consolidation, further move, consolidation, move, now a pullback. Again, this is not the end of a trend. Why has it pulled back? Well, remember, after every break of a support or resistance level, in this case, the round number 1.10, when price broke 1.10, it came back to retest it. Okay, and again, this is natural. Like you really have to start embracing the natural behavior to price action. There's certain things that price does again and again and again. And once you embrace this, you will soon see far better returns. if we look back at this, if we look at this area here, and that's 1.3. If you actually look at my crosshairs, you can see that price broke 1.3 and then came back to retest it before continuing in the downtrend. If we look at 1.2, now it's not always an exact science, but if you look at this area here, what we had was a break of 1.2 and then some sort of breather area. Okay, not as deep back to 1.2 as we would have liked, but there is some kind of breather area before a continuation. Then there has to be a correction period. Why? Because there's been a trend. Look at the length of the trend. This was from December all the way through to January. After every trend, there has to be a consolidation. A move, pull back to retest 1.10. All we're doing now is standing aside and waiting for a break of this pivot support level. A break and a close of this, and we should see further weakness. Guys, I've got multiple positions running along this trend. My positions have been open since September, okay? And I've got several positions running. So once I've loaded up my positions, all I've let them do is run. I'm not in and out of the market on a consistent basis, opening up multiple positions. I don't need to spend hours a day doing analysis and looking for trades. And, I've got my positions. I simply let them run. I've got my stop losses in play that's trailing. And until that stop loss is met, I'm going to let my trades run. Okay, euro dollar. So going back to the whole point of today's webinar, what we're looking at is what is currently happening. And what we can see, like the Aussie dollar and like the euro dollar and like the Aussie dollar, the whole market in general is in a period of correction. Okay, and that's expected. Okay, we've got a period of correction now. The same thing on the euro dollar, a break below here, and we should see a trend continuation. Let's have a look at the euro pound. Now, the euro pound is one that has behaved a little bit deeper. The correction is a little bit deeper compared to the other currencies that we've looked at. What we had was a break of this support, which became resistance. And again, I mentioned if price breaks this level, we should expect it to target 0.70 being a round number. And look what's happened. In 3 months, it came back to 0.70 and it's bounced to the upside because it is an area of support. And it's a strong area of support. If we look at past history, we can see that it is a strong area of support. So this was expected. If we go to the debt weekly, we're below the weekly 200 moving average, and we've got that red trend filter in play. However, if we look at the structure of the weekly time frame, we can see that this is nothing more than a flag in the overall direction of the trend. And if we go to the daily time frame, we're trading below the daily 200 moving average, and we've got the red trend filter. Now, I had positions running. I've actually been stopped out of my positions on the euro pound, and that's because I tightened my stops and I took profit with price being at a major support level. Okay, so I had good profit in play. Price reverse stopped me out, and it's gone beyond my stop loss now. I will simply look to get back in when price breaks and closes below 0.70. So again, standing aside. Now, intraday traders, reversal traders, range traders, I don't know. You'll have a different approach, and I understand the different approaches out there. But what I'm looking for is a few good trends a year, and then the ability to scale in or add positions or compound, and that will then accelerate profit. So if you look at something like the euro dollar trade has returned me over 35% on my account. A single trend since September, the euro dollar. And all I've done is get 5 positions loaded into the trend, and I've let those trends run. So my question then, I always ask this question, but there's some new guys in the room. So I'm going to ask this question again. How many trends a year do we need to have if each trend returns us 20, 25, 30%? How many trends a year do we need to have? Yeah, I mean, I guess everyone's different. We've got certain numbers. Some numbers are coming through on private message. So some people are saying 1, some people are saying 2, 3, 4. That's correct, guys. I mean, reality is one good trend will beat the bank. One good trend will beat the bank. So a lot of us have good money sat in the bank, and the bank's giving us 1 or 2% interest. So one trend a year will do better than that, and far, far better than that. But the reality is there's at least 4, 5, 6 trends in Forex every year, and there's the same in stocks, and there's the same in commodities. So if you're catching 2, 3, 4, 5 of those trends in each of those markets, you can see how quickly you can generate wealth and growth on your account in only a handful of trades a year and with limited screen time. Okay, and this is what you guys should really be aiming towards. You should all be really starting to get away from day trading and intraday trading. That can work, but it's not consistent. It's not going to give you the large profits that you're looking for. You know, day trading is considered the sexy way of trading. That's the reality. It's a sexy way of trading, and it's something that's come about because of the creation of the internet. Because the internet's here, we have software. The software gives us access to the market, and it gives us easy access to the market because it doesn't take a lot to open a broker account. But the reality is this: if just because it's easy to open a broker account doesn't mean the money is going to come easy. And that's what you guys have to really start understanding. What you need to do is go back to before the internet, when everything was done by hand. The daily 200 moving average was calculated by hand, for example. So what you guys need to do is go back to before the internet, but using software to to save you on the time that is needed to calculate all of these different things, because the software can calculate it for you now. But you want to really go back to the old school way of trading, longer, slower approach. Look at people like Warren Buffett. Look at people like John W. Henry. Look at the turtle traders. Look at Jim Rogers. Those are the guys that made money from long-term trading, and that's the way you really want to be approaching the markets. Yeah, smartphone trading, stay well away from that. Come on, guys, seriously, like sitting at a bus stop, playing on your phone, is that really how you're going to generate money? I mean, if you're doing it for the excitement of making a winning trade, then by all means, go ahead and do that. And what you guys have to look at is also, why are there so many flashing lights on a broker account? Whenever you open a broker account, there's lots of things flashing at you because it's got to give you that feel of excitement and entice you in. But you guys have to be smarter than that. Okay, trading is more than just a bit of a way of making a quick scalp. It's a way of really taking control of your life. Okay, and that is incorrect. Zia Buntan, I hope I've said your name correct. That is totally incorrect. You don't need to have a huge account to get trading. What you need to do is think of what you're trading per pip. A lot of people are trading with 50p, £1 a pip, and they've only got £2,000 in their trading account. If you're trading with 2,000, £2,500 in the trading account, you need to be more sensible, and you need to come in with 5p a pip or 10p a pip. And don't be fooled by that, because 5p a pip, 10p a pip, you can still see 20, 30, 40, 50, 100% growth on a trading account. So if you can grow a 2.5 grand trading account into 4 or 5 grand by the end of the year, you now know how to trade. So what you then need to think about is how you're going to get more money into that trading account. And that's why having a job is really, really important. Okay? A lot of people turn to trading as a 9 to 5. It's not. It's not a 9 to 5. It's a way of leveraging your salary and your saving. And then 2, 3 years down the line, you can then think about quitting your job and reducing your hours or whatever you want to do. Okay, it's a good question here. Javier has asked me, how many pips you earn in average? Okay, my current positions are running at about 50,000 pips. Okay, so I hope that gives you an idea of what is going on in my trading account. Okay, I'm not going to give you figures. I'm not going to give you what's in my trading account, but I'm happy to talk about pips. Okay, there's about 50,000. My current positions are running at about 50,000 pips. Why do you look at the 60 and 30? I don't look at the 60 and 30. I've just got that up here for visual purposes. I know some of you guys are looking at this trend grid, monthly, weekly, daily, 60 and 30. I don't look at the 60 and 30. I've just got that up here just as a visual purpose. Okay. Thank you. Okay, let's, guys, is that clear? I mean, I know I sort of went off on one, and I tend to go off on a tangent sometimes, but it's all just really coming from me trying to get across this message that this can be done, but you do need to have a specific approach. Is that, can I get a quick thumbs up or a quick yes? Yeah, okay. Yeah, okay, good. Right, let's move on. Let's have a look at the Euro New Zealand dollar. Okay, Euro New Zealand dollar. Again, start with the monthly time frame. Look at the trend, guys. Now, something we always hear in when we listen to the news, when we look into to all the gurus on Bloomberg or whatever you guys look at, you always hear this expression: a once in a lifetime trend or a once in a lifetime move. That's totally incorrect. Those once in a lifetime moves happen every year in every market, just on different pairs. Okay, so you can look at the Euro New Zealand dollar. Look at the trend on the Euro New Zealand dollar. This is a trend going back from 2007 to 2009, and look at the trend in the opposite direction. A huge trend and a very profitable trend. After every move, price has to consolidate. And look at this consolidation area. This is 2012, 2015. After every consolidation, there has to be a breakout. And we've had a breakout to the downside because the trend is down. Price is below 1.50, which is a major round number. After a break of this level, price is going to start targeting round numbers, 1.4, 1.3, etc. And now if you actually look at the chart, it's actually creating all-time lows. So this is a very interesting territory now for this particular pair. If we go to the weekly time frame, we're below the weekly 200 moving average and we have the red trend filter. And if we go to the daily time frame, we're below the daily 200 moving average and we're below, we have the red trend filter. If you look at the structure of the trend now, guys, price has broken through 1.5, is broken through this support, this pivot support level. After every break, pullback, retest, further weakness, pullback, further weakness. Look at the structure of this trend. This trend is moving exactly how a trend should be moving. Very linear in a downtrend, but periods of pullbacks, pullbacks, pullback, pullback. Now, dynamic traders and traders within my community have positions running on this now, and these positions are now in profit. Okay, I can see some questions coming through. Okay, how often are your entries correct and the trend develop? Okay, I think I'm kind of answering. I think I kind of get this question. If you guys want to know how many times I've been wrong since September, the answer is none. Okay, every trend that I've taken has yielded a profit. I've only taken a few trades: euro dollar, Aussie dollar, euro pound, US dollar, Swedish krona, pound dollar. These have all returned a profit. So since September, I've not had any losing trades. Okay, yeah. Do you wait for a retrace and a roll reversal of a level after a breakout? I understand this question. What you're waiting for is, and that is correct. I hope I'm answering this correct. If price breaks an area of support, this area of support becomes resistance. And this is an example. We can see we've got pivot support here. So price breaks this area of support, and then we've had a retrace to that level. Yes, that is correct. And that is something that is expected. We expect price to retrace to that level. And look what happened. It found resistance and then further weakness. Okay, price pulled back. Where did it pull back to? This level here, which is now acting as pivot resistance. And we've now had further weakness. So yeah, I expect price to pull back. And whereas most people sort of fear these pullbacks, I actually embrace them because it means a continuation of the trend. We need flags. We need these pullbacks. Okay, let's look at something else. Let's look at the pound. Let's see what the pound dollar's been doing. Pound dollar's been an interesting currency to have looked at over the last few months. And we can see that it's really been stuck in this consolidation area. It's quite a wide consolidation. So 1.7-ish and then 1.5. So you're looking at about 2,000 pips. And this bear trend here, this is where I was last involved and took a bit of profit before price reversed and stopped me out. And the reason for this consolidation area is because of this fall in price in 2008, a massive fall in price in a few months. After every move, price has to consolidate. Now, if you look at price, it's finding support at this pivot support level and 1.50. So there's this whole support level. And you can see it's struggling. We actually look at price, we can see that price is struggling. Okay, so if we go to the weekly time frame, we're trading below the weekly 200 moving average, and we've got the red trend filter. If we go to the daily time frame, we're trading below the daily 200 moving average, and we've got the red trend filter in play. I'm not involved in this. I'm waiting for price to weaken further before looking to get involved. If price breaks below this pivot, then this will start looking interesting. But look at what's happened. When price broke this support pivot level, what did price do straight after? It came back to retest it. And you can see that the round number has held strong. So price is actually stuck between this resistance and the support level on the monthly that we looked at. So there's no clear trend direction here. Okay, you have range traders and intraday traders who are sort of trading between the range and the lower time frame. But for me, there's not enough growth on my account with that approach. There's not enough money to be yielded What I'm looking for is profit, serious profit. I'm not focused on winners, I'm focused on profit. And that's a fundamental difference. A lot of people are focused on winning, getting in and out for 10 pips, 20 pips, or winning trade. That's not what I want. I want to have a few trades and I want to focus on profit, purely profit. So that's what we're doing here. Okay. Let's look at one last currency pair. And again, you guys should be familiar with this because I've looked at it repeatedly. And that's the Swedish krona. I don't tend to trade exotics too much, but there are a few exotics that do trend very well. And the Swedish krona is one of them. And you can see if you look at past how it has trended very well in periods. Okay. And if you look at the current trend, price has been up since it found support around March 2014. And it's continuously plotted higher highs. Where is it now? Well, it's finding resistance at the figure 9. If it breaks that level, then we'd expect price to target this resistance and then the figure 10, potentially the figure 11. So again, nothing to suggest the end of a trend just as yet. If we go to the weekly, we're trading above the weekly 200 moving average, and we've got the green trend filter in play. And if I open up the daily time frame, we're trading above the daily 200 moving average, and we've got the green trend filter in play. I've got positions running on this trend since September, guys. Since September, my positions are running. So I loaded up all my positions, and all of these positions are now running and are in phenomenal profit. So you can see if the euro dollar, which has been running about the same time, has returned me over 35% on my account, what do you think the Swedish krona has done in that same time? So, and these are two trends. I've only traded. These are two trends of a handful of trends that I've traded. Okay, and if you guys go to my website and I've archived all the webinars that I've done for FX Street. If you watch those webinars, you'll notice that the same currencies, I've literally looked at the same currencies again and again and again and again. I'm not diversifying my portfolio unnecessarily. I only stick to the trends that are in play. Okay, a few questions coming through. Let's have a look. Okay, there's a lot of questions here. I don't know about that. Brokers don't like traders. Yeah, I mean, I don't want to sit here and knock brokers. Don't get me wrong, but how do brokers make their money? Brokers make their money by you making multiple positions so that they make their spreads and they make their commissions. I've only made about 25 trades since September. Yeah, I hope that it's sinking in. I've only made about 25 trades since September. So the broker isn't making a lot of money from me. So I use the broker to get access to the market, but I don't trade a style that feeds the broker. That's fundamental to my approach. Okay. Okay, so you want to know my brokers? Okay, again, it's not something I like to endorse. I'm not an IB. I don't have an IB agreement with any brokers. But if you guys do want to know about brokers, please email me and I'm happy to tell you about brokers that I trade with. I'm not going to give any names over the public airway. No, the Swissy did not affect me. In fact, it added more profit because the euro dollar weakened significantly on that day. I was not trading the Swiss franc. What time frame do you take pullbacks? All my execution is done on the daily time frame. So my entry and my exiting is all done on the monthly, on the weekly and the daily. When you start getting into larger accounts, then you want to start moving your trading to the monthly and the weekly, not so much the daily. So what people do, once a day, you then end up doing once a week and you're doing less work and more profit. If you look at someone like Warren Buffett looks at his investments once a year. So, you kind of want to get the idea that less is more. I'm not saying look at your investments once a year, but less is certainly more in trading. And that's the idea that you want to get across. So my execution is all done on the daily time frame, and so is my exit management. And that is really important, guys. Exit management is done on the daily. Exiting is far more important than the entry. Do you consider swaps for T? I don't quite understand that question. If you could, Singapore dollar, yeah, we can have a look at that in a second. You look at the SP. Well, what's that? The S&P 500. Can we be a little bit clearer about what the SP is, please? Okay, I'll look at the Singapore dollar. Yeah, the S&P 500. Okay, I'll come back to that in a second. Okay, I'll have a quick look at the Singapore dollar because someone's asked me. Um, so let's have a look at the Singapore dollar, and we can see, guys, by the way, the Singapore dollar is a very good currency to be trading. Look at the trends on the Singapore dollar. A very profitable trend in 2006 to 2009, and then another profitable trend in 2009 to 2011. Very, very clean trend. After every trend, price has to consolidate. Look at the length of the consolidation. You're looking at 4 years potentially. The longer the consolidation, the bigger the breakout. Now, we started having breakouts of resistance levels. We had a break of this level. We had a break of this level. We're now expecting price to target round numbers. 1.4 is a resistance level. Look at what has happened. It's finding resistance at 1.4. Again, doesn't mean the end of a trend. It just means price is finding resistance. What we're looking for is a break and a close, and for price to target 1.5. Excuse me, break through this level, 1.6, 1.7, and so on. And if we look at the past, we can see it's been as high as 1.9, just a little bit lower, 1.85, going back to 2001, 2002. So there is potential for long-term growth on this particular pair. Weekly, we're above the weekly 200 moving average, and we've got the green trend filter. And the daily, we're above the daily 200 moving average, and we have the green trend filter. Finding resistance at 1.40. So until it breaks and closes above this, then you want to be standing aside. And look, again, just like all the other currency pairs I've looked at, it's going through a period of correction. So this is where patience comes into play. I'm not looking to trade this anytime soon. And if I'm looking to go short, I'll only go short once it breaks the daily 200 moving average. And people will be like, oh my God, look at all the pips that it's got covered. You're going to miss out on all the profit. But remember, I'm not just looking at the Singapore dollar. While I'm waiting for this to set up, I'm going to be trading something else. I could be trading a stock, for example. One of the stocks that I'm currently trading and is handing out very good profit is KR. Okay, and I've been in KR since price broke above $50, and it's now closing in on $80. So I don't need to be worried about the Singapore dollar because I'm already in stocks and in currencies that are handing out very, very good profit. Yeah, another stock that I'm currently involved in is Disney. And you can see how Disney is now creating higher highs. Okay, so it's really important to have an extensive portfolio. Okay, let's go back to some of these questions. Okay, now the way I look at indices, so the S&P, the Dow, the Nasdaq, a lot of people trade them. I don't trade them. I simply use them as a guideline to tell me whether we're in a bull market or a bear market. I would rather trade the individual stocks that make up that market as opposed to the indices themselves. So a lot of people trade the S&P 500. Fine. Well, I would rather trade the 500 stocks that make up the S&P 500. It gives me a lot more choice. It's safer. And, you know, sometimes the S&P 500 is actually retracing or pulling back, and there are stocks that are still creating new highs. So it's far safer and far more profitable to be trading the 500 stocks than the actual S&P 500 index. My exits, as I've mentioned, is all done on my daily time frame. Why are exits more important than entries? Well, I mean, if you really think about it, when you're in the direction of the trend, everyone can find an entry point. Breakouts, pullbacks, you know, you hear about it all the time. But the real key to trading is entering and it's still being in that trade 6 months later. And that only comes down to good exit management. Most people have stops too tight. Most people close off their positions too quickly. Most people start seeing retracements, close off their positions. Yeah, people get emotional. So exiting is far more important than the entry because it's the exit that determines how much profit you leave with. I hope that's correct. What is your usual? Okay, my risk to reward ratio. My risk to reward is 1 to infinity. I hope that makes sense. 1 to infinity because I do not want to limit my profit. Most people work on a 1 to 1 or a 1 to 2. I don't work on a 1 to something limit. I work on a 1 to infinity limit because I want my profit to be simply, I want my profit to grow and grow and grow until the trend dictates a trend reversal. So there is no risk to reward ratio that I can specifically say to you that I work on. I work on a 1 to infinity ratio. My emphasis, and this is something that's really, really important, guys, my emphasis is on protecting my capital. It is not on the profit. A lot of people put their emphasis on the profit, which is why they over risk, they take bad trades, they risk large. There's no logic to what they're doing. It's because they're all focused on the profit, the cars, the Lamborghinis, the holidays. That's where people focus on. Whereas as a trader, as an investor, my focus is on capital protection, and then the profit takes care of itself. I hope that's clear. Switch your focus. Okay, I'm going to leave it right there. Thank you all, guys. I hope that was useful. I hope that was insightful. I hope that gives you an idea of who I am and the way I trade. I know the regular guys always know what I'm about, but the new guys, I've seen there's a few names. Thank you all for taking time out. I'm just going to direct you to my website. If you want to get in touch with me, this is my website, thetraderscosmos.com. If you want to contact me, just click on the contacts page. If you go to blogs and then trading contributions, you'll see all the sort of various publications that I write for. So I write for the Huffington Post. These are all a backlog of all the webinars that I've done for FX Street. I write for FX Trader magazine, and I've recently started writing for Money Show as well. All of these guys have approached me to contribute to them because what I talk about is very different. It's more of a longer term approach as opposed to a shorter term intraday trading approach. Okay, guys. Also, if you're not on Instagram, please follow me. Instagram.com and Zaheer.Anwari. That's my Instagram handle. I'm finding Instagram really sort of useful to connect with people because it's so visual. I was on Twitter and I am on Twitter. Don't get me wrong, I am on Twitter. But from a visual perspective, Instagram is really, really powerful because it allows you to have a backlog it allows you to go back into my backlog of posts and see how trends have developed. Okay, so please have a look at that and follow me on Instagram. Okay, any questions? If I haven't answered anything, please get in touch with me, guys. Okay. I wish you all a fantastic day, morning, afternoon, evening, wherever you may be, and all the best for the week ahead. Thank you, guys. Take care. Bye-bye.